What is up, everyone? My name is Rose and welcome back to the channel. If you are new here, I graduated college back in 2020 and I currently work at a Fortune 500 company. I spend my days navigating the corporate world and my nights obsessed with the markets. Today we are diving into the world of options, which is basically the wild west of finance. This is the second part of our 6-week series on building a side hustle through trading. If you missed the first one, go back and watch it. But today is where the real math starts. We are talking about calls and puts 101. The building blocks of everything. I want to be totally honest with you right from the jump. Options are not a lottery ticket, even though TikTok gurus might tell you otherwise. If you do not understand the mechanics, you are essentially just giving your money to the banks. But if you take the time to learn this, you can create consistent cash flow and protect your portfolio. I personally invest bi-weekly into VOO and VTI because I believe in long-term index fund strategies. However, I use options to add that extra layer of income and protection, especially in a year like 2026. With inflation hovering around 3.8% and oil prices spiking, the market is incredibly volatile right now. We are seeing housing affordability at record lows and mortgage rates sticking around 6.5%. In an environment like this, just holding stocks isn't always enough to feel secure. So let us break down what an option actually is by comparing it to something you know, which is stocks. Imagine you want to buy Apple stock, which is currently trading around $145. If you buy 100 shares, you are spending $14,500. If the stock goes up to 200, you make $5,500. If the stock drops to 100, you lose $4,500. It is a one-for-one relationship, which we call a linear payoff profile. But what if you didn't want to tie up $14,000? What if you just wanted the right to buy Apple at $145 sometime in the future? That right is called a call option. Think of it like putting a down payment on a house. You pay a small fee now to lock in a price for later. Let's say this call option costs you $5 per share, or $500 for one contract. If Apple flies to $200, you exercise your right to buy at $145 and sell at $200. Your profit is that $55 difference minus the $5 you paid for the option. That is a $50 profit per share on a $5 investment. That is 10 times your money, which is why people get addicted to this. But here's the catch. If Apple stays at $145 or goes down to $100, your option is worthless. You lose the entire $500 you spent. The good news is you don't lose the $4,500 you would have lost if you owned the stock. Your downside is capped at exactly what you paid for the contract. This is what we call an asymmetrical payoff profile. Now, let us talk about the other side of the coin, which is the put option. A put option gives you the right to sell a stock at a specific price. This is basically insurance for your portfolio. If you are worried about corporate layoffs or a housing market crash in 2026, you buy puts. Let's say you own Apple and you are scared it will drop below $145. You buy a put option with a $145 strike price. If the stock crashes to 100, you still get to sell it for $145. You are protected while everyone else is panicking. But just like car insurance, if you don't get into a wreck, you don't get your premium back. The money you paid for that put option is gone if the stock stays up. Now, why do 90% of beginners lose money? Because they only ever buy options. When you buy an option, you have to be right about the direction, the price, and the timing. In 2026, the Fed is being very unpredictable with interest rates. If you buy a call and the stock goes up, but it doesn't go up fast enough, you still lose money. This is because of something called time decay. Options are melting ice cubes every day that passes. The option loses a little bit of value because there is less time for a big move. That is why I prefer to be the one selling the options. When you sell an option, you are the insurance company. You are the one collecting the $5 from people like Justin. If the stock doesn't move much, you just keep the money and move on. Selling puts on stocks I want to own anyway is one of my favorite strategies. It is like getting paid to wait for a discount. If Apple is at $145 and I sell a put at $135, I am saying I will buy it if it drops there. If it stays above $135, I keep the premium. If it drops, I buy the stock at a price I liked anyway. But I am even cheaper because of the premium. This is how professional traders and institutional investors actually operate. They aren't gambling on moonshots. They are managing risk and collecting rent. To see all these numbers, you need to look at an options chain. It looks like a giant spreadsheet, but don't let it intimidate you. Calls are on the left, puts are on the right, and the strike prices are in the middle. You will see different dates, which are the expiration dates. In a volatile year like 2026, choosing the right expiration is everything. If you go too short, you might get wiped out by a random headline. If you go too long, the options get very expensive. I usually look at 30 to 45 days out. It is the sweet spot where time decay starts to work in your favor if you are a seller. But before you go out and place a trade, you need to have a plan. Do not trade with money you need for rent or your mortgage. I started with a very small account and made plenty of mistakes. I remember losing a few $100s on a tech trade because I didn't understand earnings volatility. It hurt, but it was the best tuition I ever paid. You have to be disciplined and you have to be a long-term thinker. That is why I still keep the majority of my wealth in VTI options are the spice, not the main course if you want to get started. I have a free options trading starter kit linked below. It has all the terms we talked about today, plus some quizzes so you can test your knowledge. Next week, we are going to look at the best brokerages to use in 2026. Some of the old apps are getting slow, and there are some new players with better tools. We will also talk about how to read the Greeks, which sounds scary but is actually simple. If you found this helpful, please hit that like button. It really helps the channel grow and lets me know you want more of this content. I honestly think that once you get the hang of this, you will never look at a stock chart the same way again. You will start seeing opportunities where others only see risk, but remember that risk is only something you can manage if you are honest with yourself about your goals. Are you here to gamble or are you here to build wealth? I know my answer, and I hope after this video you know yours too. Let us talk about the psychological side of this for a moment. The biggest enemy you have in trading is T, the market. It is your own FOMO. I have seen people double their money in a week and then lose it all the next day because they thought they were geniuses. You have to stay humble and you have to stay small. Never put more than 1 or 2% of your total account into a single options trade. That way, if you are wrong, and you will be wrong sometimes, it does break you. You just learn the lesson and come back for the next opportunity. I want you to really think about the math we discussed today. Write it down in a notebook and run some scenarios for yourself. Look at your favorite stock. Maybe it is Tesla or Amazon or even a boring utility stock. Think about where you think it will be in a month and then look at the options chain to see if the market agrees with you. Usually the market is smarter than we are, so we have to find where the market is mispricing risk. That is the secret sauce. In 2026, the cost of living is high and everyone is looking for that extra edge. Trading options can be that edge, but only if you treat it like a business. If you treat it like a hobby, it will pay you like a hobby, which usually means it costs you money. If you treat it like a career, it has the potential to change your financial life forever. I am so grateful to have you on this journey with me. It means the world that you are taking the time to invest in yourself. I will be here every week sharing everything I know, no fluff, just the facts. Make sure you are subscribed and that your notifications are on. We have so much more to cover in this series, and I don't want you to miss a second of it. Go grab that starter kit, and I will see you in the next video where we talk apps and brokers. Take care of your money, and it will take care of you. Seriously. Look at the historical data of the market cycles. We have seen these patterns before, and we will see them again. The technology changes, but human emotion stays the same. Fear and greed are the two primary drivers of the stock market. Options allow you to profit from both. If you can keep your emotions in check while everyone else is losing theirs, you are already ahead of the game. I remember my first successful trade. It wasn't even a big one, but it was the first time I felt like I was in control. It felt better than any paycheck I ever received because I knew I did the work to earn it. I want that for you too. I want you to feel that confidence that comes from understanding the game. The more you practice, the more intuitive it becomes soon. You won't even need to think about the formulas. You will just see the trade, but until then, stay the course and keep learning. The world of finance is big and it is easy to get lost, but if you stick with this series, I promise to be your guide through the noise. We will talk about credit spreads, iron condors, and all the advanced stuff later. But today was about the foundation and you just built a very strong one. Give yourself some credit for making it to the end of this script. Most people wouldn't even try. You are already in the top 10% just by caring enough to watch this. So let us keep that momentum going. I am proud of you and I am excited for what we are going to achieve together. Let us make 2026 our most profitable year yet. Remember, the best investment you can make is in your own mind. Everything else can be taken away, but your knowledge stays with you. I am rooting for you every step of the way. Check the links in the description for all the resources I mentioned. I spent a lot of time putting those together to make your life easier. Go have a great rest of your week, and I will see you next time. Keep those charts clean and your head clear. See you soon. Now let us dive deeper into the mechanics of the option premium itself. The premium is made of two parts: intrinsic value and extrinsic value. Intrinsic value is what the option is actually worth if it were to expire. Right this second, if Apple is at 150 and your strike is 145, your call has $5 of intrinsic value. Extrinsic value is the time value, the hope that the stock will move even further in your favor. As an option seller, we want that extrinsic value to decay as fast as possible. In a high interest rate environment like we have in 2026, the math changes slightly. Higher rates actually make call options more expensive and put options slightly cheaper. This is because of the cost of carry, which is a fancy way of saying money has a time value. If you are buying a call, you are essentially borrowing the money to control those shares. If interest rates are high, that borrowing cost is baked into the price of the option. You don't need to be a math genius to understand this, but you do need to be aware of it. I see so many people complaining that their options aren't moving the way they expected. Usually it is because they didn't account for volatility or interest rates. Volatility is like the volume on a speaker. When the market gets scared, the volume goes up and options prices explode. If you buy when the volume is already at a 10 and then the market calms down, the volume drops to a 5. Your option will lose value even if the stock price doesn't move at all. This is called a volatility crush, and it is the #1 killer of beginner accounts. I want you to be the one benefiting from these moves, not the one being crushed by them. That means being patient and waiting for the right setup. In 2026, there are plenty of setups if you know where to look. Watch the energy sector, watch the mega cap tech, and keep an eye on the bond market. Everything is connected, and options are the bridge that lets you trade those connections. I know I am throwing a lot at you, but that is because I respect your intelligence. I am not going to give you a watered-down version of reality. You deserve the truth so you can make informed decisions. We are building a community here based on transparency and hard work. No shortcuts, no hype, just the data and the strategy. I want to see your success stories in the comments in a few months. I want to hear about how you protected your portfolio during a dip or how you made a safe income during a flat market. That is the real win. The luxury cars and the flashing lights are distractions. True wealth is having the freedom to do what you want with your time, and options are a powerful tool to get you there. I have used my corporate experience to bring a level of professionalism to my trading. I treat my account like a business with a balance sheet and a risk management plan. I suggest you do the same. It takes the emotion out of it and lets you think clearly. We will talk more about building a trading plan in a future video. For now, focus on mastering the concepts of calls and puts. Draw the payoff diagrams until you can see them in your sleep. Understanding the geometry of the trade is the first step to mastering the market. I am here to help you every step of the way. If you have questions, leave them below and I will do my best to answer as many as I can. This journey is better when we do it together. I am so glad you joined me today. Let's keep the momentum going. There is so much opportunity out there. We just have to be prepared to take it. Master the basics, stay disciplined, and stay hungry for knowledge. That is the only way to survive and thrive in this 2026 economy. All right, that is definitely enough for one session. Go take a break, let this sink in, and then come back for more. I will see you next week, same time, same place. Take care of yourself and your trades. Stay savvy, stay focused, and most importantly, stay consistent. I believe in your potential to master this. Let us make it happen. The future is yours for the taking. Peace out. See you on the next one. Bye. I honestly cannot wait to share the next part of this series with you. We are going to look at actual screen recordings of the brokerages I use. You will see exactly where I click and how I set up my orders. It will make everything we talked about today feel much more real. Until then, keep studying that starter kit. It really is the foundation for everything we do. I put my heart and soul into making this content accessible. I hope it is making a difference for you. All right, I am finally heading out. Have an amazing week. Good luck in the markets. And remember, never risk more than you can afford to lose. Safety first. Always. Okay, bye final. Goodbye. See ya. Stay safe out there. The market is a beast, but you can tame it. One trade at a time, one lesson at a time. We got this. Talk soon. Bye. Seriously, look at the historical data of the market cycles. We have seen these patterns before, and we will see them again. The technology changes, but human emotion stays the same. Fear and greed are the two primary drivers of the stock market. Options allow you to profit from both. If you can keep your emotions in check while everyone else is losing theirs, you are already ahead of the game. I remember my first successful trade. It wasn't even a big one, but it was the first time I felt like I was in control. It felt better than any paycheck I ever received because I knew I did the work to earn it. I want that for you too. I want you to feel that confidence that comes from understanding the game. The more you practice, the more intuitive it becomes soon. You won't even need to think about the formulas. You will just see the trade. But until then, stay the course and keep learning. The world of finance is big and it is easy to get lost, but if you stick with this series, I promise to be your guide through the noise. We will talk about credit spreads, iron condors, and all the advanced stuff later. But today was about the foundation, and you just built a very strong one. Give yourself some credit for making it to the end of this script. Most people wouldn't even try. You are already in the top 10% just by caring enough to watch this. So let us keep that momentum going. I am proud of you and I am excited for what we are going to achieve together. Let us make 2026 our most profitable year yet. Remember, the best investment you can make is in your own mind. Everything else can be taken away, but your knowledge stays with you. I am rooting for you every step of the way. Check the links in the description for all the resources I mentioned. I spent a lot of time putting those together to make your life easier. Go have a great rest of your week, and I will see you next time. Keep those charts clean and your head clear. See you soon. I honestly cannot wait to share the next part of this series with you. We are going to look at actual screen recordings of the brokerages I use. You will see exactly where I click and how I set up my orders. It will make everything we talked about today feel much more real. Until then, keep studying that starter kit. It really is the